Good afternoon, everyone who's joining us in this digital space, and welcome to the second in our IGP soundbite series for this term. For those who don't know me or haven't met me, my name is Dr. Christopher Harker. I'm Director of Research at the Institute for Global Prosperity. And I've also curated and organised the soundbite and seminar series this term. And this term we are rethinking what financing prosperity might be, what it might look like. And I think today's speaker is absolutely going to focus on the main kind of theme of our series, which is how do we think about forms of purposeful finance that actually address the social, environmental, and cultural concerns and things that we want to achieve, rather than just the economic goals, which is what our current financial systems often serve. So without further ado, let me welcome our speaker today. Our speaker is Jessie Griffiths, who's CEO of the Finance Innovation Lab, which is really the leading institute in the UK for thinking about how we build a financial system that serves people and planet. Prior to joining the lab, Jessie was director of the Development Strategy and Financing Programme at the Overseas Development Institute, or ODI as it's now known, an international think tank where he led a research and policy team working on how to finance the Sustainable Development Goals, or SDGs. Prior to that, Jessie worked for the European Network on Debt and Development, Eurodat, which is a network of 50 European civil society organisations, again working for transformational changes to global and European policies, institutions and structures to ensure that we actually have environmentally sustainable financial and economic systems that also address poverty. He served as a coordinator at the Bretton Woods Project and worked for Action Aid and the Department for International Development, as it used to be. Jessie's a trustee of the Jubilee Debt Campaign, which has been doing some very important work campaigning for debt cancellation. And he's also a trustee of Tax Justice UK, a campaigning organisation that is seeking to reform the tax system. So as you can see, Jessie really is an expert in contemporary finance. Jessie has a master's in finance from SOAS, master's in international politics from Aberystwyth, and a bachelor's degree in politics and parliamentary studies from Leeds. Today, he will be presenting a talk titled Power and Purpose, Transforming the UK's Financial System for People and Planet. So Jessie, you're very welcome. Actually, I forgot to issue a very important instruction to our audience, which is to say Jessie's going to talk for approximately 20 minutes or so, and then we're going to open the floor to questions. So please add your questions using the Q&A tab, and also do use the upvote function to kind of quite literally upvote the questions that you want me as chair to ask. So Jessie, without further ado, you're very, very welcome. Thank you ever so much for joining us, and really looking forward to hearing what you've got to say.
Thank you, Chris, for that very kind introduction, and thanks for this brilliant opportunity. I'm really looking forward to this discussion. As you said, I'm CEO of the Finance Innovation Lab, and our work is to collaborate with others to transform the financial system for people and planet. And we're trying to create a system that is democratic, sustainable, just, and resilient. But my talk aims possibly to depress you a little by listing 4 of the major failings in the UK financial system, why we're so far away from that vision of a system that works for people and planet, but also hopefully to give you some hope. So by giving some examples of how people are acting together to change the system. So in some ways it's a bit like a roller coaster. So there'll be some tension and fear as you rise and rise, and we discuss the failings, and maybe some exhilaration as we hurtle downwards towards some of the solutions, but probably it won't be quite as exciting as that. We shall find out. So as I said, I want to focus on the 4 major failings of the UK financial system and give some examples of hopeful action for change in each area. But first, maybe a couple of starting points where I'm coming from, or where the lab is coming from. And the first is that we see the financial system as not being an end in itself. So the purpose of the system should be to support human flourishing on a healthy planet. So it's outcomes that really matter. So relevant questions that we pose are, does the system help everybody manage their finances, help society to thrive, not how many people are employed in financial services, which the government is quite obsessed by. Does the system direct finance towards environmentally sustainable investments, not what share of the economy is the financial sector? So that's the first starting point. And then the second would be that it's a human system. So it's quite unlike almost any other system you can think of, in that it's entirely created by people. And so we believe that because people created the system, people acting together can change the system. And that's why the lab's job is to support the people and organizations that are acting together to build their power and to create that change we want to see. But I did promise you those 4 failings. So let me start with the first one, which is that the system doesn't support the non-financial or the real economy very well. So I don't think we need to talk about the system's propensity for crisis and how devastating financial crisis can be, because we've all lived through the global financial crisis and seen how problems in the financial system can crash the whole economy. But it's also important, I think, to realize the UK financial system doesn't, on a day-to-day level, support that economy very well. And I think one important background point to note here is the UK financial system is very large. So it's one of the largest in the world. Certainly the London vies with New York as the title of the global financial center, but it's certainly the biggest compared to the size of our GDP of any major country. And in fact, there's some new Bank of England research showing that foreign assets and liabilities in the UK financial sector are more than 500% of GDP, which is almost twice the next country, which is France, and considerably more than all other major economies. So we have this very large financial sector, and I'm sure you're probably more aware of the literature than I am, but there is quite a lot of discussion in the literature about at what point does the financial sector become so big that it actually starts to harm the rest of the economy through mechanisms like a brain drain of talent away from other areas. And there's one academic estimate which suggests that it's when financial sector lending to private companies is above 90 to 100% of GDP, which certainly in the UK we're above. So we have this very large financial sector, and it's not serving the real economy well. So one good example is the Bank of England estimates that bank lending in the UK to non-financial businesses is only 18% of total lending, or only 12% if you don't include the real estate sector. So in fact, most of what the financial sector is doing in the UK is buying and selling financial assets. And so this leads to serious problems, particularly for businesses and particularly for small and medium enterprises in the UK who find it very difficult to access finance. And levels of bank lending, for example, to SMEs are much smaller than in comparable economies. And a recent survey of SMEs, small and medium enterprises, found that only 25% of them felt that their bank supported their business. So that's a very low level appreciation for what the financial sector is actually doing for SMEs. And many of them have to finance their own growth and expansion through their own retained earnings rather than through bank lending, which is common in other countries like Germany. So that's, I think, one of the failings. And now to give you some hope, there's a very hopeful new movement of purpose-driven finance organizations, which is the regional mutual banking movement. And over the past few years, we at the lab and others have been supporting the emergence of these new, this new banking model, which would be a network of 18 regional mutual or cooperatively owned banks. And the aim is to create a new type of institution that supports the local regional wealth building, has a relationship model of banking, provides services to everybody in the community, so it doesn't exclude those on lower incomes as much as the rest of the system does, and behaves responsibly and sustainably. And there are 3 that are in the process currently of getting their banking license. So it's the Bank Cymru in Wales, Southwest Mutual and Avon Mutual. So we're already getting these organizations off the ground. And the idea is that they would create a sizable alternative to the rest of the system, which is dominated by shareholder-owned banks and largely by the big banks. And this model is actually really successful in other countries. So it's based on the German Sparkasse model, which are a mainstay of their financial system. And just to link that back to the discussion on the global financial crisis, whilst we were recovering from the crisis, bank lending was shrinking. So there was a credit drought. It's very hard for companies and others to get lending, whereas in response to the crisis, the Sparkasse increased lending significantly. And so it's one reason why Germany emerged quicker and better than we did from the crisis. So that would be my first failing. The second would be that the financial sector system fuels inequality at both national level and at global level. And I'm sure you'll all know that the extent of inequality is quite staggering. So in the UK, the bottom half of the population owns less than 10% of total wealth, while the top 10% have 45%. Globally, you may have seen Oxfam's been tracking the wealth, how the wealth of the richest compares to the poorest for many years. And so their estimate is that the world's billionaires have more wealth than the bottom 60% of the whole world population. And I looked at the Forbes rich list before coming on this call, and the 2021 edition estimates there are 2,755 billionaires. So less than 3,000 people have more wealth than the vast majority of the world's population. And actually, it's become worse in the pandemic. So Forbes note that there's been 660 new billionaires created in that year, and 86% of billionaires are richer than they were previously. So whilst the economies have been suffering and many of us have been suffering, billionaires have been doing rather well. And of course, this intersects with all other kinds of inequalities. So white British households, for example, have on average almost 10 times the wealth in terms of saving and assets of Black African British and Bangladeshi British households. So there's this huge inequality of wealth, which of course means that the financial system gears itself to serve the wealthy more than it does to serve the poor, or more than it does to serve most people. But I think it also is important to note that it's not just the fact that the inequality of wealth means that the system is serving the wealthy elite, but it's also facilitating that concentration of wealth, in particular by facilitating tax avoidance and tax evasion or tax dodging. And the UK is very much the center of this problem, I would argue. So the Tax Justice Network estimates that global losses of tax to tax havens are in the region of over $400 billion per year. And that's mostly due to tax dodging by multinationals, but also by rich individuals. And that 4 countries are responsible for the majority of this: the Netherlands, Luxembourg, Switzerland, and the UK. So we are at the center of the problem of global tax dodging. And in fact, if you look at the Tax Justice Network's Financial Secrecy Index, because it's the secrecy of the system which allows people to hide wealth and to evade tax, and also contributes to problems of money laundering and transfer of corrupt or illegally obtained wealth. In the Financial Secrecy Index, 5 of the top 20 places are taken up by UK or overseas territories or dependencies. So the Cayman Islands is number 1, British Virgin Islands, Guernsey, the UK itself, and Jersey are all in the top 20. So the UK and the jurisdictions we sponsor are very much a part of this problem. But to give you some hope, I think campaigners have made this issue center stage over the last decade or so, and we've won some real changes to global rules. So, for example, we now have registries of beneficial owners of companies, so trying to prevent people from secretly owning companies, and in some countries those are public. We've got country by country reporting for banks in the European Union, which means that banks have to show where they make their money on a country by country basis, every single country in which they operate. So it's more difficult for them to hide how their internal operations actually work, which can help facilitate tax avoidance, tax evasion. So there is progress, but there's still an awful lot to do, of course. But it does show that acting together is possible to change national and global rules, which can shift the system. And that's why one of the lab's main programs is to support advocates for social and environmental purpose to influence government policy and regulation, of which there is an enormous amount going on now. And we could talk about that if you want to, but there's over 100 different initiatives going on in response to Brexit to transform the regulation of the UK financial system. So that would be my second failing. Then my third failing would be that the system is not working well at all for people on low incomes and those who come from marginalized groups. So another way of saying this is that the UK financial system is riven by financial exclusion, and to a greater extent than many other comparable economies. So to give you some examples, there's this concept called the poverty premium, which is the extra cost that people on low incomes might have to pay for essential services like energy or transport. And 1/5 of that poverty premium is due to the higher costs of finance, higher costs of insurance and credit and so on, according to Bristol University. So it increases costs for people on low income, but also it doesn't supply the services that you need. So in 2016, there was a requirement for banks to provide basic bank accounts for all, but still there's 1 million people in the UK who don't have a bank account. And some of those are caused by choice, but most of them because they can't get one. And if you can't get a bank account, it's harder to get a job, to get benefits and so on. So it helps to keep people in poverty. And in fact, the Financial Conduct Authority estimates that as many as half of the population in the UK is financially vulnerable. So they don't have the savings to cover them should there be a change in their circumstances, they lose their job or have an unexpected bill. And of course, these problems also link to other forms of inequality and discrimination. So as one study shows that Black victims of fraud are more than twice as likely to be denied a refund by their banks as white customers. We know that 2/3 of the people who have to use very high cost credit providers are women. We also know that people experiencing mental health problems are more than 3 times as likely to be in problem debt as those without. So obviously the intersection of these different issues is very important to think about as well. And so one basic issue, of course, is that credit services for people on low income and marginalized are very dominated by high cost providers. So high cost credit, one estimate I saw estimate that 3 million people use high cost credit in the UK, and the rates of interest that you can be charged if you have a high cost credit provider, can be as high as 1,500%. So it can be really eye-watering. And the hope I would like to give you is that there are purpose-driven alternatives that exist, and they're growing, to provide responsible financing services to people on low incomes, which include things like community development finance institutions, which are specifically focused on this group. So one study, for example, showed that one of these CDFIs could save, by giving better terms of credit, managed to save their low-income customers £30 a week on average, which is a lot if you are in a low-income family. Mostly because if you get a timely, affordable loan when your washing machine breaks down or your heating breaks down, it can stop you from getting into problem debt and you spiraling downwards. And so, although it is true that high cost credit providers are estimated to be 10 times as big as responsible credit providers in the UK, there are around 50 CDFIs. And I think the hope I would also leave you with is in other countries, there are models that are much more significant. So there's over 1,000 in the US, or credit unions, which also are another alternative, which are owned by their members and focused on providing fair services in their communities. Whilst we've only have 2% of the population in the UK who are members of credit unions, in Ireland it's over 70%. So it is possible to imagine quite a different financial system, one that has institutions that do provide not-for-profit services to low-income and vulnerable groups. And in fact, that's one reason one of our programs is to help to grow these purpose-driven alternatives. And we've been working with these organizations to identify the barriers to their growth and work out how they can act together to remove those barriers. So that was my third failing. And then my final one, which is possibly the one that's at the forefront of everyone's mind at the moment, is that, of course, the financial system is not working for the planet in the way that we need it to. And we're all hopefully very aware of how serious the climate emergency has become. And I think one very interesting thing this year was that the International Energy Agency, the IEA, which is a pretty conservative body, has now warned that we can't have any more expansion of oil and gas if we want to stay within our 1.5 degrees safe climate limit. So we're at the stage where we've got to stop expanding oil and gas and quite quickly move away from it. But I think by most estimates, in the next 10 years, we need to make very significant changes. But of course, the financial system continues to finance fossil fuels and continues to finance their expansion. So since the Paris Agreement was signed in 2015, one estimate is that 60 major banks have invested $3.8 trillion into fossil fuels. But of course, it's also true, I think it's important to remember that the banks and the financial system have been financing the green transition. So the UN estimates that in that same period, almost 3 trillion was invested in renewable energy. Actually, no, so I think that was over a 10-year period. So the scale is still not comparable, but there is a growing focus on the kinds of green solutions we need if we're going to tackle the climate emergency. And so I think that I have quite a lot of hope in this area, in that the financial system and the big banks and other players are feeling the pressure, and change is beginning, not as fast as it ought to. But for example, the number of financial institutions that at least have a stated ambition to reach net zero is growing rapidly. And the challenge, of course, is to get them to have a plan how they will actually get there quickly. But some are moving towards making plans. So the French postal bank, La Banque Postale, announced this month that they will stop any new expansion of oil and gas funding and quit the rest of their oil and gas exposure by 2030. So it's this kind of actual concrete action that we're beginning to see, but it needs to happen a lot quicker. And we've been working a lot in this area, because I think this is one issue where we need the mainstream of the financial system to shift quite significantly, quite quickly. And so we've been working with others on a different number of what you might think of as leverage points or pressure points, including we have a network of entrepreneurs, we call them, inside the big banks, who are trying to pressurize their banks from the inside to move more quickly. But there, of course, are also campaigners, investors, leaders within the industry and the government, increasingly, that is ratcheting up pressure on this issue. So we can have some hope, I think, that we can make the kinds of changes that we need in the next 10 years. So I think that's where I'm going to conclude. So whilst I think my career and my work focus very much on, or my mind is often focused on the big failings in the system, I think the work we do at the lab, and the work I would encourage everybody to think about, is what can we do about that, and how can we act together to create the change. So I hope that hasn't been too disorienting a roller coaster ride, and hopefully it's whetted your appetite to think about how we can create the change that's needed. And I'm very much looking forward to any comments you may have, thoughts, questions, or your own perspectives on this. Thank you.
Thank you ever so much, Jesse. That was a wonderful talk, incredibly lucid and clearly organized and articulated. And I think, yeah, offered a really excellent, incisive framework for us to think through both problems, but as you said, also solutions and hope. And you began with co-production and you ended with co-production. So my opening discussion point / question is around co-production, which is something the Institute for Global Prosperity is very committed to in our ways of generating knowledge and acting on that knowledge. And the specific sort of question that I had was to pull together those two hopeful examples of regional banking networks that's been set up with Phil playing a really crucial role, and then those other purpose-driven organizations, CDFIs and credit unions. And as you noted, the purpose-driven sector in the UK is small, but when we look at other examples in Europe and North America, elsewhere, it's quite large. So from a kind of co-production perspective, how do we work with not just the institutions, but people at large? How do we convince everyone on this call to stop banking with the big 4 or 5 banks, or you know, and move into these are kind of more purpose-driven sectors or companies?
Yeah, I think that's the $1 million or billion or probably $1 trillion question that we're very focused on trying to find a good answer to. So I don't have a good answer, except maybe to disentangle some of the possibilities. So we did some work last year, a series of workshops and discussions with leaders from the purpose-driven finance sector to identify what are the reasons why you know the sector can't grow fast enough to become part of the mainstream. And I mean, I think there were basically, I would say, 4. So one is, and this is the one that came up most commonly, is capital. It's very hard for those institutions to raise capital. And my feeling is that we can do some work to convince the suppliers of capital, maybe some philanthropic organizations, other investors, to do more to direct their capital towards these organizations, but the government will have to step in. And in fact, the government does in many other countries, particularly for CDFIs and provision of services to low-income people. So there's a capital issue. There's a issue of the market, if you like, which is your question, like how can we convince everybody to have an ethical bank, or and it's a bit of a chicken and egg situation, I think, in the UK at the moment there, that so we tried to open a new ethical bank account. So we have one ethical bank account, and it's safe to have more than one because we have over £85,000 of assets. But actually it's very difficult to do that. There's not always the capacity, not all of the ethical banks can do that. So that's as an organization, but as individuals, it may not be possible to find an organization that suits you. But also, I feel that there's a lot of work to be done about advertising and marketing and showing people what the alternatives are. So I think there's a big job there. There's obviously huge problems of regulation. So the financial system regulation is not geared towards these kind of institutions. So for example, the mutual banks that you mentioned are coming up against significant problems about competition law, where because they want to cooperate with each other, they are viewed under competition law as a cartel. And that means that they're finding it quite difficult to operate in the way that they would like to. So there are big issues to overcome. And that's one reason why I think it will take a concerted effort by all the groups working together with supporters to overcome those issues. And so the final point is, of course, that there are issues to do with the fact that you are a small part of the system, and therefore you don't have the market and other advantages. So there is a bit of a chicken and egg, but I think that gives us a hope that the growth could become more rapid once some of these issues start to become overcome. So maybe that's quite a long answer to your question. Hopefully,
no, that's wonderful. Thank you very much. I can see that we've got both questions in the Q&A and also some of the panelists want to jump in. I'm going to use Chair's privilege just to have one more question before I invite everyone else to join in. I will remind the audience as well, asking questions, you can upvote the questions you want to ask. It's unfortunately a popularity contest with me in charge. So Jesse, the second thing I wanted to just chat about quickly is the issue of time and timing, and you mentioned particularly in point 4 the kind of urgency of the transitions, particularly regards that we need to see, and this is echoing something Bill McKibben wrote in The Guardian, I think it was last week, about the debate now is not about the need for transition. That's widely accepted. The issue is speed, because if we don't do it quickly enough, we might as well not have done it at all. So have you got any kind of ideas, or just could you talk more about the work Phil's been doing to focus on that issue of speed in particular? I'm really interested in how do we get things done quickly. I mean, maybe I'm being very impatient, but that there's also a kind of necessity.
Yeah, and I think in relation to climate, this is why we need the government and public regulators to act quite significantly, because I don't think, with the best will in the world, there's any version of the change that could happen from within the industry or from investor pressure or consumer pressure that would create change, even if it's possible to create change large enough, certainly not on the timescale we're talking about. So I think we are all looking to public policy to do the kinds of things that we need. And I think actually the time issue is interesting here, isn't it? Because what we're really actually trying to do is to get the financial system and the economy to align with our longer term interests. So we all know that if we let climate change run out of control, the economic as well as human damage will be devastating. So it's much cheaper and much more in our interests and much better for long-term financial assets, for example, if we can solve this problem. But of course, that runs against a lot of the incentives that exist within the system. And I think it's up to the government ultimately to try to shift some of those incentives. For example, we have a new national infrastructure bank, but it's very small. It does have a green mandate, but it's very small. It's nowhere near big enough if we're going to, have publicly directed investment into the types of green alternatives we need. There's a good call on central banks to weight assets according to the climate impacts, so that if you're holding on to fossil fuel assets, for example, as a bank, then that should be penalized, so that you're incentivized to shift more rapidly. So I think there's quite a lot of things the government could do to tilt the system to get us more in line with our medium to longer term interests. And of course, there's the argument that is, and maybe I'm going on too much. I think that's probably a good place to stop.
Yeah, no, I think that's a really valuable point about actually it's multiple temporalities. But also I don't want to start talking again. So I'm going to turn now to the Q&A. We've got a question by Lydia Martin, a number of people wanted me to ask. So she asks, looking at the institutions as large organizing factors that put our social health at risk, have we now created a reality where they are too big to fail? Therefore, our social well-being will continue to be the expenditure used to keep these institutions going. So how much revolution is needed in order to see a serious change in the industry that has created these problems? Thank you very much for that question, Lydia.
That's a really, really good question. And I think I've got two parts of answer to that model and to that question. It comes from, or a simple way of thinking about it is something that's called the two loops model in system change thinking, which is that we have the old system, which doesn't work very well, and we need to see that retiring, shrinking, disappearing at the same time as the new system, the second loop, is growing and coming up to replace it. And I think that's the sort of framework I think about, is that we need to grow the hopeful purpose-driven alternatives so they become the mainstream, and in the future the whole system could be dominated by purpose-driven alternatives. But at the moment, the mainstream is so large that we do need to recognize that needs to shift as well. Now, in terms of the sort of too big to fail problem, and I would take hope from the fact that one thing we discovered in the global financial crisis is that, or relearned, is that the system is entirely backed up by the government and public money. And so we own NatWest Bank. We, the public, the government owns NatWest Bank. Why? Because we had to bail it out at the last system. So the last crisis. So it is possible to imagine, whilst the institutions may seem so big that we can't do anything about them, they also only can exist at that scale because of the implicit and explicit guarantees that we give them as a society. So it's a question of whether we can mobilize that public power to do something about them. I think is really kind of central question.
Mm-hmm. Thank you. I'm going to go straight to a colleague who's on the panel today, Nikolai Minchev. Nikolai is in the Institute for Global Prosperity, he's Deputy Director of Research. Nikolai, please.
Hello. Thank you, Chris. Apologies.
Nikolai, what we'll do is we'll come back to you. I'm going to go to Tracy, who's also on the panel. Tracy is a PhD student here at IGP. Unlike Nikolai, she's not sharing the room with other people on the Zoom call, but Nikolai, we'll come back to you. Tracy, please.
Hi. One of the things, having worked in the financial services industry for a long time, is that many of the solutions you're suggesting involve a fragmentation of participants. And that can be enormously difficult for interactions between financial institutions. And while I can appreciate that what you're perhaps suggesting is that these more localized or more focused, smaller alternative institutions absorb the underserved categories in the market, is there not a risk that if you push too hard in that direction, you just absolve the mainstream big banks from trying to address the problem? And how much cooperation do you feel is likely to be to make a full financial system that incorporates your suggested new participants, rather than leaving them to pick up the sort of worst credit risks?
Yeah, no, I totally agree. I guess maybe I've overstated or misstated my case. I think my case would be that the purpose-driven sector needs to grow in the UK to provide a more diverse and purpose-driven alternative but it's not likely that it would become, well, maybe in 50 years or 100 years, you might hope that, but I guess in the medium term, or whilst we're all still alive, it's not going to supplant all other institutions, more that it's a missing part of the system. And it's one reason, I think, why, for example, regulation and so on doesn't favor the kind of good outcomes that we might necessarily want, is because those actors don't have political voice, and therefore the regulations are designed to suit the large players. So I totally agree with you. And I do also think, and we do a lot of work with some of the big banks, that change is possible within large financial organizations, and they can shift quite significantly. And that's why we're focusing on working with them on climate issues, because I think the distinction I would make is that when you have a purpose-driven organization that has social environmental mission as its #1 priority, alongside obviously financial returns, that organization itself drives itself in a particular way. If you don't have that, then the direction that the other institutions go will depend on all other kinds of pressures. So the shareholder pressure, what the government is pushing them, what customers are doing, and so on. So it's just more difficult to imagine those institutions doing the right thing, if you like, of their own regard. And so one reason we're focusing on climate is because those pressures are so high that I think we can imagine shifting mainstream finance quite rapidly on climate. When it comes to, for example, serving the underserved, low income, it's quite hard to imagine them doing that, because obviously there's quite significant financial reasons, if you like, in their business model why they don't do that. And in other countries, like in the US, for example, one reason they're a bit better than us at this is that there is a requirement on the banks to serve all the community. So it takes some kind of public intervention.
Thank you, Tracy. Nikolai, I believe you are in a better place now.
Hello. I apologize for the technological glitch. Thank you, Jesse, so much. That was a fantastic presentation. My question is a rather big and broad one that I'm just interested to sort of hear your views on. And I'm particularly interested in this sort of huge level of inequality that you were talking about. And I think you mentioned that the bottom 50% in the UK own less than 10% of the wealth, which is significantly less than the top 1%, right? And so this is, in my view, not only morally obscene, but it's also very, very expensive, because the economy has to pay for the assets, for so much resource to be locked up in the assets of a very small number of people. And so my question that I sort of want to hear your views on is, how do they get away with it? How is this possible?
Yeah, that's a great question. And I guess there's loads of answers to that question. But one maybe meta answer is, I guess, to do with paradigms or mental models, paradigms of thought that have come to dominate how we think about the economy since the 70s, I guess, since the neoliberal revolution against Keynesianism, that have obscured this question. So, the idea that you make your own wealth, it's good. It's good to pass wealth to your children. The government shouldn't take that from you. There should be a free enterprise economy with restrictions on trade unions. So there's lots of I guess ways of thinking that maybe many of us, including politicians and so on, have adopted. But I think another major underlying factor is the decline in trade union power. So I think, if you think about the share of economic growth that's been going to capital compared to labor, has been shifting over the last 40 years significantly. And that's, I would argue, largely because trade unions have become less powerful actors in society. So there are big changes like that. And then, of course, there is, I think, a sort of ratchet effect going on as you start to hide, for example, your wealth or structure your wealth to avoid tax. It becomes more difficult to collect tax from wealthy people. The incentives to do that go down, and the opportunities to evade go up. So there's that. I mean, yeah, I could probably think of lots of other reasons, but I don't know if I've really answered your question or not.
You did. I just wanted to, I know it's an extremely complicated issue, so I just wanted to sort of get the conversation started and see how, how you would approach addressing that question from your perspective.
Well, I mean, I do think, so being on the board of Tax Justice UK, I do think their approach is a really good one, which is to say, well, let's focus on wealth taxation, and let's focus on the fact that wealth is severely undertaxed. So it's undertaxed compared to income. So if you make your money, like most of us do, through income, you pay a higher proportion in tax than if you make your money from wealth. But also that there are good reasons why we might tax wealth more, including, for example, in response to the pandemic, we might have taxes on companies that have done particularly well, or on billionaires, as a good way of resetting, paying for the issue by taxing those who can actually afford it the most, and at the same time reducing inequality. So I think that's a really good option.
Thank you, Nikolai, for that question. Thanks, Jesse, for answering. So I'm going to go to the Q&A. Thanks again for questions. And we have an anonymous attendee who asked, do you see a role for fintech in disrupting the financial system for good? So the question is fintech for good.
Yeah, that's a great question. I wrote a blog about this recently, which you can have a look at on our website. And I think this is where so questions of change become really interesting. What's the difference between disruption and transformation? So that would be the categories in my mind. So it's certainly true that fintech is disrupting the system, and the question is whether it is transforming it for the good. Is one that at the moment it doesn't seem to be. So we have done a lot of work at the lab supporting new purpose-driven fintechs through our fellowship program, and some of those have got great products that help you find a good credit union, help you manage your money better, provide alternatives to mainstream finance, track what your carbon impact is of your spending, and so on. So there are really exciting ways that fintech can help to both change organizations or institutions in the system and change the way we interact with the system. But on the whole, that's not, there's very little evidence, I think, that outcomes are improving. And part of the reason there, I think, is that one big paradigm of thought we're trying to challenge is amongst the regulatory community and the government, that the purpose of the regulation should be to incentivize the right kind of outcomes for society and the environment. And so the FinTech review, the Ron Khalifa FinTech review, actually had sections of that deleted, which related to this issue. And it was very much encouraged to focus just on the growth of the FinTech sector as an end in itself. And the government strategy is to have, be the world leading FinTech power, not to use FinTech to improve social and environmental outcomes, but just to be big in FinTech. So I think there is, we have this massive opportunity from the digital data revolution, the growth of FinTech, to change the system. But at the moment, it's not leading, I would argue, to the kind of outcomes we want, because the power dynamics in the system are not pushing it in that direction yet.
Thank you for that question, anonymous attendee. It was excellent. Thank you, Jesse, for the answer. So I'd now like to invite another panelist, Aris Komporozos Athanasiou, who's an associate professor in the Social Research Institute at UCL, and author of Speculative Communities Living with Uncertainty in a Financialized World. Thank you for joining us, Aris.
Thanks very much, Chris, and thank you, Jesse. Really fascinating talk. And really my question, I don't know, perhaps it's not kind of, it touched on something that is in the periphery of what you spoke about, and it links a bit to the fintech question. It's more, I suppose my interests and my work is around that end of the financial system that is more unregulated and more sort of less risk averse and more kind of speculative. And I was wondering what you make of, I mean, there is about that that more speculative impulse and orientation of financial markets that I know in your work, you if you like, you talk about the kind of embedding markets and financial institutions better and more justly in society and politically. And I'm wondering what happens with that huge part of the markets that is profoundly disembedded from reality and real values. And I'm thinking here also about things like, you know, cryptocurrencies and NFTs and meme trading and all these kind of crazy worlds that actually of late seem to be making some. There are claims, there are debates that there is another kind of democratization that is possible precisely through those more speculative worlds, and you know, retail trading and people's participation in those in disruptively participating and shorting and all this. And I'm just wondering what you make of this debate and what you, as your in your work and at the lab, sort of how do you engage with those worlds?
Yeah, that's such a big topic and really important question, and makes me think quite a lot. And I think one response I would have would be about democracy. And so I think what we want is a more democratic financial system where everybody has a say over the institutions and the system that, you know, has such a big impact on all of our lives. And so I think a problem with the sort of narrative that crypto is opening up, you know, escaping from state regulation and allowing us to be, is that it's profoundly undemocratic, because the rules and institutions that govern that are being set not by all of us collectively in some kind of public realm, but by those actors themselves, in the interest of who? In the interest of the very small proportion of the population that can actually engage or benefit from that system. So I think the challenge is more to bring all actors within the public regulatory sphere, but to improve the way that works so that all interests within society can have a greater say in that. And of course, it's not unique to crypto and new things like that. There are, you know, very large parts of the system that are still governed by private bodies like the International Accounting Standards Board, and also globally the Financial Stability Board excludes most of the world's countries from its governance. So there's huge problems of democracy across the system, but I think that would be the first angle of thought that came in response to your question. I don't know what you think about that.
Yeah, no, I agree. I mean, I'm very skeptical about the kind of democratization promise in these kind of practices. But I think I'm asking also because, I do think there have been interesting sort of moments and events recently, like this whole GameStop event, this kind of mass speculation, this kind of instinct of parts of society that are disenfranchised, and they see an opportunity for kind of taking a revenge, you know, by shorting the system, shorting the speculators. I think there's something interesting there, but as you said, it's I think it's more of a symptom of those inequalities rather than a promise of something better through the vehicle of speculation.
Yeah, definitely. And I think one thing I always try to keep in mind when thinking about, you know, the role of investors and others, and how few of us are investors. So there's often this assumption, because most of us have pensions, although people who earn less than 10,000 don't have auto enrollment. So there's 6 million people don't have workplace pensions. This assumption, we're all, you know, the pension industry is enormous, a large part of the financial system, investors are pension funds, therefore we are investors, therefore it's not true. So most of the, you know, the top 20% of the population has overwhelmingly the vast majority of pension assets, and a large portion of the population has no pension assets. So when we think about investors, we've got to remember we are talking about wealthy people on the whole and not everybody. And so I think that poses a challenge as thinking about them as actors of change, we have to recognize that within it.
Thank you, Aris, for that question. I'm tempted to make a snark comment about the USS, the University Superannuation Scheme, but I'm going to instead ask one final question from Charles Croydon, who I'm going to paraphrase slightly, Charles, asks about debt rescheduling, maybe debt cancellation, and the importance of this sort of legislation to changing our financial systems, working towards planet and people.
Absolutely, Charles, totally agree. And I think it's another one of these. And so in the lab, we're always trying to think more deeply about systems change and getting down to the issues of power dynamics and down to the issues of paradigms of thought and, you know, what is acceptable and what is regarded as not acceptable. And debt is a great example where this rigid idea that you must repay your debt is very strongly held, but it's really damaging because on occasions, very often debt is unjustly contracted, and very often on occasions debt can be very damaging to the economy and society as a whole. And so being able to cancel, reschedule debt to create a more just system is really an important paradigm of thought that we need to shift to. And so I think obviously the most obvious thing to think about is global debt problems and how we had from the 1980s right up until 2005, 2006, when the Jubilee debt campaign, Jubilee debt movement managed to finally get most debts of low-income countries reduced, was a stranglehold on many developing countries caused by far too high levels of debt, and that damaged everybody. And in fact, the debt wasn't even owned by the people who contracted the debt in the first place. It had been sold on and then eventually picked up by governments. And so governments of the North were, if you like, enforcing poverty on governments of countries in the global South through debt. So certainly we should be cancelling debts when they become unsustainable, and we should certainly be cancelling debts when they are unjust. But I think that should also, in response to the pandemic, should apply in the UK as well. We do need to look seriously about the fact that I think Step Change says there's 2.4 million people now with problem debt in the UK, and that's rising. And that obviously imposes a huge burden on their lives, but also on all of us through the economic impacts of keeping people in that situation. So how can we find ways of reducing, rescheduling, cancelling debts that allow people's lives to be liberated, but also economic benefits for all of us?
Thank you very much, Charles. Thank you, Jesse. I'm very sorry to say we've already reached the end of our time, and I can see from the Q&A we've got many excellent questions around the asset economy, around students as a kind of movement for change. Many thanks for your questions, and to everyone in the audience for attending. And of course, our biggest vote of thanks is to Jesse for leading such a wonderful discussion, provoking us with such an insightful talk. We really appreciate you taking the time to join us, Jesse, and I really hope we can continue this conversation and maybe even in person at some point soon. So to round things off, in 1 minute, I'm going to ask my panelists to unmute, come on camera just to thank you. But while they're doing that, can I remind everyone, next Thursday, in the 4 to 6 p.m. slot, we have Daniela Gabor, who I'm sure will give us an excellent talk about what she calls the Wall Street consensus, building on our discussion. So yeah, if I could lead all the panelists, and thanks to panelists for joining us, and just say thank you very much, Jesse. It's been a pleasure having you.
Thanks, Chris, and thanks everyone. It's been a great pleasure to be here, and I'm sorry I didn't get to answer all those questions, but you can find how to contact me on the website if you want to ask me directly, or you can ask me on Twitter.
Thank you very much, Jesse.
Thanks very much.
Goodbye.
Bye.